foremost in our hearts is the goal of assuring benefit entitlement and compassion for our disabled veterans. For more information, visit davma.org. That's davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zada and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zada and Paul Lane.
Chuck and Paul and Tucker with you here today, and as we look at the economic data that came out today, as has been the case for the last month or so now, it's really not particularly good. And I don't think there's anything wrong with saying that. Look, we're going to tell you how things are looking, and it hasn't been good the last month or so, especially on the inflation front. We got three pieces of data that came out this morning. The first piece, well, they actually all came out at the same time, so it's kind of just a matter of preference. Paul, I'll defer to you. Where would you like to start today?
We can start with retail sales.
Okay, let's start with retail sales, which were bad to very bad. And what I mean by that is, at first glance, you'd say, oh, they printed, 0.6% growth for the month. Like, that's great. Like, that's what you want to see is a return to growth. Except there are two problems. The first is that the prior month was revised from down 0.8% to down 1.1%. So the prior month was 1/3% weaker than it was previously reported. The second piece is that expectations were that this month we're going to come in at 0.8%, and you only came in at 0.6. So last month revised down by 0.3, this month missing by 0.2. That's 0.5% of retail sales growth that you've missed now in 2 months. That's a pretty big miss for 2 months, my Paul.
It is, but wouldn't the argument be that from a Fed perspective, you'd want to see the slowing down of retail spending from an inflation perspective?
Well, yes, but I still don't want to see retail sales growth shrinking, which if you add these two numbers together, that's what it's doing. Mm-hmm. You're seeing, like, if you see retail sales go down 1.1% and then only rebound 0.6%, that's not slowing growth, that's contraction.
Sure. Certainly over a longer period of time, that would be concerning here. But I did view it a little bit with that piece in mind that perhaps some slowing spending is this idea that maybe the inflationary impact, this could be something that slows down some of the price increases. But you're right. Certainly don't want a contracting economy, particularly with a market that has risen so significantly from a valuation perspective over the last 15, 16 months here.
And the slowdown in retail sales, I think the big thing is it's concentrated in the segment that's been growing, which is non-store, which is online, actually down 0.1% for the month, and that, because of how big online sales is, that has a pretty meaningful impact. You've been seeing some other areas of weakness, but they've been weak consistently. Clothing stores have not shown a lot of growth in the last 12 months. Sporting goods stores have not shown a lot of growth in the last 12 months. Building supply stores, Home Depot, people got their fix of Home Depot back in 2021. They're like, I'm good. I don't need another retaining wall. One is just fine. But I think when I look at this, it's something where overall, the retail sales growth that we're seeing, over the last 12 months now is running at a total of 1.5%. It's kind of treading water, and that's why I look at the last, you don't have a ton of. It's not like you're coming off this huge, growth year in retail sales, and you're like, oh, that's why people are pulling back. It's, gee, are we going to see, kind of a pullback from where we were? Which, again, if everything else is fine, it's one thing. But, you look at some of the other data that we got, and we'll go and talk about inflation now, and we get a hot PPI report,
yes.
Producer Price Index. Yeah. And this was expected to come in at 0.3% for the month. It printed 0.6%, which, Paul, can you confirm that 0.6 is twice the rate of 0.3?
Confirmed.
Okay, that's good. I always like to have my math double-checked. Is it going to print 0.6 again next month? I have absolutely no idea. Is there any direct feed through into CPI on this or PCE? The answer is no. But you can kind of piece together where PCE is going to go later this month, personal consumption expenditures, which is the Fed's preferred measure of inflation. And based on the pass-throughs that you get, it's going to be hotter than people initially anticipated. And so as a result, you get the 10-year Treasury selling off 7 basis points to 4.26%. And I'm telling you, I've been saying it for the last month or so, this idea that inflation is vanquished, I don't think the facts are in evidence, and it's shown up now in every single inflation report that we've gotten for the last 2 months. PCE, CPI, PPI, it's printing across the board, and at some point the Fed's going to have to pull their head out from the sand and say, yeah, we probably can't cut in June, especially you get one more of these on the March one, which is going to be, a month from now, obviously. And you get one more of these, and you're kind of like, one is, an accident. 2 is interesting. 3 data points in a row is a trend, and that's what you have in March if you end up with another hot print. So if you now have a trend, that's running 4% plus on inflation for 3 months, I don't think you're cutting in June. I don't.
You know what blew me away, Chuck, is looking at the Fed futures this morning. I had anticipated that the likelihood of a cut in June would be much lower just based on all the data points that we're speaking of. So first I did start by saying retail sales, hey, perhaps that is the consumer slowing down spending. However, looking at this producer price inflation data that we received, I'm in lockstep with you. Really, from an inflation perspective, continues to add fuel to this idea that we are certainly not out of the woods yet. And I was shocked to see that we still had a higher likelihood than not of a cut in the month of June because of all the economic data points that we've received. I was skeptical that it would be pushed out further to July or the fall, but we still sat at around, I believe, 60% likelihood that on a futures basis we would see that first cut occurring in the month of June, and that was a big surprise to me based on everything that we've seen here recently.
The other piece that's going to be interesting to watch on all this, and I don't want to get too technical because that just sucks. You've got the U.S. The data is showing that the U.S. economy is likely slowing. The Atlanta Fed, we talk about this a lot, they run a model for GDP growth called GDP Now. And they're going to update it later today. They haven't yet with this new data. But the latest update was that it was running at a 2.5% projection for Q1, which is good growth. It's not bad by any means. So I do need to state that, look, if the U.S. economy grows at 2.5% for the full year, that's great. Like that's probably in line with its theoretical max capacity without overloading the economy. But it is a slowdown from 3% plus in Q4. And some of the additional data we've been getting has kind of got me wondering if we're slowing a little bit more than that. So the piece that does get interesting to me and why that Fed cut is, still projected, you've got this weird situation where, not weird situation, you got this situation developing where if the economy's slowing in the short term but inflation's still printing, it's kind of like, well, what does the Fed do then? And this Fed has always talked more about the employment side of their mandate. Like even when inflation was printing, 8% plus in the spring of 2022, the Fed was like, well, we just want to make sure we're not going too high too fast. And it's like, guys, you got unemployment at like 4%, inflation's running at 8%, and you're worried about, is a 0.5% hike going to be too much? Like, raise them up, Jay. Raise them up. Let's get things moving. So I look at it now, and you've got this interesting dynamic here where if the U.S. economy is slowing further, and let's see what develops over the next few months, I still am skeptical of any kind of like recessionary bet because retail sales have been, as I mentioned, not great for the last year, and the U.S. economy still grew like gangbusters because people were buying services last year. So I'm not calling a recession. But what I will say is if the U.S. economy does slow further and shows signs that, hey, a recession could become more concerning, then it gives the Fed a little bit of cover even if inflation is higher. Like if unemployment prints 4.1 or something like that by May.
Sure.
Okay, does the Fed say, yeah, maybe we need to do something? But here's the thing. If they cut, The rest of the world is starting to accelerate again after a very bad, very poor 2023. And so if the Fed is cutting while the ECB is standing pat and the Japanese central bank, the Bank of Japan, is, loosening its controls on interest rates to allow them to float higher, you end up with dollar weakness. And you know what dollar weakness is very good for? Higher commodity prices. You know what higher commodity prices are very bad for?
Consumers.
Inflation. So you get this it's a short-term thing. I'm not one of these people that cries stagflation, because stagflation has basically happened 1.1 times in U.S. history that we have, reliable data for. It happened in the 1970s, and it happened for, a quarter in 2022, where I think you could say, yeah, this is pretty stagflationary. I don't really view a quarter as like anything meaningful, so I'm not going to just say, the U.S. is heading for stagflation. I don't think that's the case, because you need a very strange convergence of circumstances to get there. But I do think you have this potential for like a brief period where it's like, things just look ugly, because the Fed might be thinking that they need to cut if there's economic weakness showing up. But in doing so, they may be sowing the seeds for a rebound in inflation that they don't actually want, because they're so concerned about the employment side of their mandate. That's kind of where I am.
They have to keep their foot on the gas pedal if that were the case, though, based on what they've said previously, because their main fear is inflation lingering for longer than possible. But obviously, we got to get there first.
Yeah, it's not an enviable position, but they've also kind of gotten here through their own making, because they declared victory in December, and when you declare victory, in December, and then try to walk it back, the market's like, no, you already said this. Like, why should we believe you now?
Right.
Let's take a quick break here. When we come back, let's talk about mortgages, and we'll talk about why mortgage rates continues to hang out in the 7s, and why there's just not much that people can do right now to get them much lower.
Breaking business news as it happens, only here on the Financial Exchange Radio Network. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues, and while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
The stock market recently reached all-time highs, but with the volatility we've seen over the last several years, there are no guarantees it'll stay there. This is Susan Powers from the Armstrong Advisory Group. While job growth is strong and inflation has declined, the past few years have shown us how rapidly conditions can change, which is all the more reason for you to have a financial plan in place that is built to withstand the ebbs and flows of the stock market. Our new monthly guide is called Building a Financial Plan, and in it we discuss the process of putting that plan together, including the importance of setting goals from paying off debt to saving for retirement, as well as a variety of additional planning planning strategies. Call our office at 800-393-4001 to get your new guide today, or you can request it online by visiting ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. It is our honor to support these great American heroes, and you can too by visiting dav5k.boston. Your gifts can support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information and to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Paul, I want to talk a little about mortgages. Does that sound good?
Sounds good.
So there's a piece in the Wall Street Journal. It's hard to beat that 7% mortgage rate. What is the deal? Why are people not finding lower mortgage rates than 7%?
Interest rates.
And why is the T silent in mortgage?
Well, I'm just going to ignore that because I don't know what you're doing there. But mortgage rates, we've had higher.
Why is the T silent in mortgage?
We've had prevailing mortgage rates at this level for a sustained period of time since 2022 when the Fed had increased interest rates and that had trickled down to the longer end of the curve. However, it really is important to point out, and this kind of ties into a story that ties in with Janet Yellen and the White House projections for interest rates going forward for the next year when they put out their fiscal budget here, where they were anticipating higher rates for longer. If you look historically, the mortgage rates that we saw between 2019 and 2022, that period there, we didn't even break 4%. And if you look back 50 plus years of data, that is just abnormally low rates. And the 7% that we're seeing today, many listeners would tell you that when they went to buy their homes in the 80s or 90s, that rate would still be a very strong rate to get, or something that they were more accustomed to. At this point in time, there's really no indication that unless we go into that recessionary environment and rates have to be pinned back, that you'd see any opportunity to get a lower rate than the 7% mortgage rate that we set at today for the 30-year fix. Also, it's interesting that the ARMs, the adjustable rate mortgages, that spread, because the shorter end of the curve is higher in terms of the Fed fund rate, there isn't really a lot to be gained by doing the ARM versus the 30-year fix from where we sit today on the mortgage rate spectrum.
When you look at this, overall, the picture, again, especially in light of what we're seeing in movements for Treasury rates this week, the picture's probably going to get worse, like at least in the short term. And I know that all of the real estate professionals that are listening right now are like, Chuck, don't say that, but you got to call a spade a spade. 10-year Treasury is up 15 basis points in the last week.
Right.
And so that's going to end up putting pressure on rates moving higher right as you head into the spring housing season, which probably means that in order to clear the market, which now again, it's every market's local. I say this a lot, but nationally, we now have more inventory available by about 19% than this time last year. In order to clear that excess inventory, prices have to come down because you don't have enough people that can afford homes at these rates to clear the market. When you only have, when you have 20% fewer homes available, you can clear that market with fewer potential buyers who, actually have the means to do so. As inventory expands, to clear that market, prices have to come down. It doesn't mean that you won't see sales volume. Sales volume may actually go up, and this has been my base case all year, is that sales volume goes up this year, but prices go down. And I think you might be seeing the signs of it. The only question, does that inventory level get maintained? Because with higher rates, fewer people are likely to list because they might be more mortgage locked than if rates were lower and they could move, to a home on a 6.5% mortgage instead of 7.25%.
When you quoted the 20% increase, was that relative? That was relative to last year's inventory, but still historically we're at extremely low inventory levels to where we were previously, correct?
Great point. So yes, what we are seeing here in terms of the data is that right now, and this is according to data from Mike Simonson, who works for Housing Wire. Right now, current inventory of single-family homes nationwide is about 500,000. It's 21% higher than this point last year. Normally, at this time of year, we'd have somewhere around 800 to 950,000 homes available nationwide. So we're still running, maybe 55 to 60% of normal inventory levels.
It's crazy.
But it's better than it's been each of the last 2 years. I mean, 2 years ago at this time, there were only about 300,000 homes available. So we've seen significant improvement since the battles of 2021 and 22. But there still is a ways to go to get it to normalize. The question that's out there is, look, people have put off moving as long as they can. But I think it was Connor Sen's piece a couple weeks ago that said, look, you got these 5 Ds that tend to make people move: death, divorce. Tucker, what are the other 3 Ds?
Dodge, dip, dive.
There were 5 of them: death, divorce.
It's got to be something with family, like kids expanding. But I don't know how that ties into
D with kids.
Dependence increasing in your household.
Dependence, sure. Dependence. What else do we have? Downsizing was another one,
sure.
And I forget what the 5th one was. But you can only put these things off for so long. Like, if a family member dies last year, you could say, hey, we're going to try to wait until next year to sell the property and maybe things will be better. But ultimately, if you're not using it because it was a parent's home and you don't want to cover the expense, eventually you just say, okay, we got to sell this thing. Mm-hmm. And so you try to move it. You can put these things off for a while, but eventually life has to go on. So I think that might be something that starts to drive listing volume in the next year or two, just because there's only so long you can wait to sell a property.
Here it is.
You only get...
I'm sorry. Divorce, downsizing, diapers, diamonds, and death.
Diapers.
5 Ds.
Got it.
Diapers. Oh, and diamonds. Yeah, that's the other one. So yeah, those are the 5 Ds. We should get that printed somewhere so I don't forget it again. That would be good. Taking a look, what else we have coming up. We're going to take a quick break here, but we're going to talk about corporate profits when we return, and we've got Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visit usvi.com for more information and to reserve your trip today. That's visitusvi.com.
The stock market recently reached all-time highs, but with the volatility we've seen over the last several years, there are no guarantees it'll stay there. This is Susan Powers from the Armstrong Advisory Group. While job growth is strong and inflation has declined, the past few years have shown us how rapidly conditions can change, which is all the more reason for you to have a financial plan in place that is built to withstand the ebbs and flows of the stock market. Our new monthly guide is called Building a Financial Plan, and in it we discuss the process of putting that plan together, including the importance of setting goals from paying off debt to saving for retirement, as well as a variety of additional planning strategies. Call our office at 800-393-4001 to get your new guide today, or you can request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi folks, Susan Powers and Chuck Zada here from the Armstrong Advisory Group, and we're talking today about our brand new guide for the month of March, Building a Financial Plan. Chuck, why is it important to build a financial plan?
Well, I think it's something that can give you some important guidelines as far as what you should be doing on a daily, weekly, and monthly basis in order to be able to hit those goals, and whether those goals are saving $100 into an emergency fund or trying to save thousands of dollars for a college education that may be coming in 15 years, you still need to have a plan for how to execute that on a daily basis in order to get wherever you want to be going.
So we know how fluid life can be, Chuck. What happens if you need to change your plan because your circumstances change?
Well, I think this is one of the most important things, is that a plan is just an initial guide for what you should be doing, but if things do change, you have to adapt that plan as well. So let's go back to what I was previously talking about with saving for college. If the picture for how expensive college is going to be in the future changes because of changes to student loans or things along those lines, you might say that you need to adapt your plan and change your saving strategy, and that's perfectly fine to do if the reasons, for doing so make sense and if the picture is different from when you initially started building that plan.
Folks, learn how you can develop a comprehensive financial plan to help you pursue your goals, whether they are modest or substantial. Call right now to request your free copy of our brand new guide, Building a Financial Plan, at 800-393-4001. That's 800-393-4001, or request your free copy at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, it's been somewhat of a back and forth morning so far, but currently markets are in mixed territory, mostly flat as traders are reacting to retail sales and the producer price index this morning. Right now, the Dow is off by 33 points, S&P 500 down by 6 points, and the NASDAQ up by 14 points. Russell 2000 selling off by 1.5%. 10-year Treasury yield up by 8 basis points, now at 4.27%. And crude oil up nearly 2% higher, above $80 a barrel, now trading at $81.22 a barrel. Dick's Sporting Goods reported ahead of the open this morning, where its holiday quarter marked its largest sales quarter in the company's history, where its sales climbed 8% higher than a year ago during the holiday quarter. Furthermore, Dick's said it was guiding to another strong year in 2024 and also upped its dividend by 10%. Shares in Dick's currently up by 12%. Sticking with the sports apparel sector, where Under Armour announced that Kevin Plank would return as the company's CEO. In addition, Evercore ISI downgraded the stock to underperform from in line. Shares in that stock currently down by 12%. Robinhood stock up by 7% after the financial services platform announced its equity trading volume jumped 41% in February from a year ago. Dollar General stock down 4% despite the discount retailer posting better than expected fourth quarter results. And Home Depot announced it will open 4 new distribution centers as it pursues more sales from remodelers, contractors, and other home professionals. Each facility will average about 500,000 square feet, about 5 times the size of an average Home Depot store. It will offer room for the larger orders of products that pros need, such as lumber, shingles, and insulation, which then can be delivered directly to a job site. Home Depot shares down by 0.75%. I'm Tucker Silva, and that's Wall Street Watch.
Paul, there's a piece in the Wall Street Journal titled Big Profits and High Prices. There is a connection. And it talks about how I'll quote from it, between late 2019 and second quarter 2022, corporate profit margins shot up to 17% from 13.4%. Quote, these are pre-tax profits as a share of revenue, minus inputs such as imported parts, and excludes financial companies. The reason was obvious, it states. As the economy emerged from pandemic shutdowns, companies faced a wall of demand they couldn't meet, a recipe for pricing power and high margins. Okay, fine. But it then says, look, margins have not come down, and that's still contributing to high prices and high inflation. To which I say that is pure hogwash. Paul, in 2001, after the tech bubble burst, corporate profit margins were running at 6.2%. By the third quarter of 2006, they had more than doubled to 15.6%. Was 2001 to 2006 a period that saw a significant bout of inflation?
You don't hear that often mentioned. It's the 70s, not the 2000s, that gets the inflation.
It's because it did not exist, okay? Let me give you what we saw in terms of the year-over-year CPI in the 2000s, okay? Even if and again, I'm going to go through 2006. We did see a little bit that popped up on headline inflation in 2008. Remember when oil went to $150 a barrel for like 2 months in 2008 before the financial crisis? We saw a little bit of inflation then, but in that case, it was transitory because literally inflation was negative by May of the next year. But in 2006, end of 2006, inflation ran 2.54% for the year. Is that high?
No.
2005, 3.42. The answer again is no. End of 2004, 3.26.
No.
No. End of 2003, 1.88.
Very not.
Once again, no. End of 2002, 2.38. Through the entire period, it averaged like 3%. That is not a period of high inflation. That, by the way, it's basically what you averaged during the 90s. All this talk about a 2% inflation target, in the 1990s, you averaged right around 3% inflation, and the world was fine. Okay, it was actually one of the best economies that we've seen in the last 70 years. So, this idea that, companies' profit margins went up and that's why we're seeing inflation, the facts are not in evidence that profit margins have any meaningful drive on inflation. If they did, then why did we not see any kind of meaningful bout of inflation when corporate profits went from 6% to 15% in the 2000s?
Yeah, there's so many different levers that go into that profit margin. You know, one of them that they did mention in the piece here is the net interest expense, that as a percentage of revenue, a lot of these companies have very low interest rates that they're locked into, so the amount of interest that they're paying on their debt has been significantly lower. Now when that gets refinanced, it will be a higher percentage. But to me, this piece, while it started with good intentions, I liked the idea that they were in the Wall Street Journal trying to go at this idea of shrinkflation and all of these phrases that have been so popular out of the Biden political party. But the numbers here, to me, sort of left me with a question mark at the end saying, okay, what is really your stance here? And it was this idea, okay, bigger profits, this is the reason why we've seen higher prices. But to me, I couldn't really make that connection. It seemed like a sort of misguided attempt to try and draw the two together.
No, and you hear all this, it's corporate greed that's driving inflation. Paul, did companies wake up the first day of 2021 and say, hey, have you guys heard about greed? Have you guys heard about greed? I watched this movie, Wall Street. Did you hear that greed is good? Maybe we should try some of this greed. Let's try some greed and see how that works for us. Maybe we'll be more profitable. Paul, what year was Wall Street made in?
The movie?
I want to say 87. I'll look it up.
87. Very good, Tucker.
Thank you.
So greed has been good since 1987. Has there been any meaningful bout in inflation prior to 2022 and 2021 after, greed became good?
No.
So I just find it to be pure poppycock that, companies, they got greedy and profit margins went up. Companies have always been greedy. I'm not saying that's a good thing. I'm saying it's a thing. Greed alone does not generate inflation. You need a confluence, a convergence of events to generate it. You need some kind of supply shortage. We had that.
Big time.
Definitely. We talked about big time. You need a demand surge. Well, we had that. We had
huge demand surge.
$4 trillion printed out into the economy and given out into the economy. Also at a time when people basically couldn't do a whole lot. And so once stuff finally, started opening up more, it was, let's go spend it. So you had a demand surge and you had a supply shortage. And then you also had rising inflation expectations. And that's that's what you need in order to generate inflation. So the idea that, it's corporate greed and profit margins, no, we've seen corporate profits rise over the last 2 decades pretty consistently. And it didn't generate inflation because that's not how inflation works. Inflation is not one price going up. It's not 10 prices going up. It's the price level overall rising, because otherwise, if one price goes up, Paul, you remember back in 2008 when gas prices went through the roof, we were seeing $4 gas back then. And what did people do? They said, okay, we can't spend as much elsewhere, because that's how it works. If you don't have the means to see an overall price level rise and keep spending on everything else,
Spending
then inflation
gets shifted.
dies down. Inflation just dies out like it did because people can't sustain it. It's not something that just happens because one price goes up or something like that. So, in any case, higher profit margins, facts not in evidence that it is the driver of inflation, in my opinion. Let's take a quick break. When we come back, we got a little TikTok talk right after this.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues, and while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Everyone has financial goals, and regardless of what yours are, the process of establishing a comprehensive financial plan is key to achieving them. This is Chuck Zada from the Armstrong Advisory Group, and our new guide called Building a Financial Plan may help. Some goals are bigger than others, like saving for retirement, but even smaller goals like paying off your credit card debt can be an important part of a well-rounded financial plan. As you build your plan, break your goals down into realistic tasks, establish a savings strategy, or determine an asset allocation that aligns with your risk tolerance. It's also important to create checkpoints to help you monitor your progress and make sure your plan remains on track. Call us today at 800-393-4001 and ask for our new guide called Building a Financial Plan. That's 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
Paul, let's talk a little bit about TikTok. You a big TikToker?
I do not have TikTok, Chuck.
I don't either. I never believed in it. But TikTok yesterday faced a defeat in the House of Representatives, who voted pretty convincingly in bipartisan fashion to effectively require the company to either be sold or no longer operate in the United States. And TikTok is now responding. They put up messages on, everyone's app saying, "Hey, here's your congressperson. Call them and tell them that you want the bill to fail," which in turn galvanized support for the bill, because it was just, very creepy that TikTok said, "Hey, don't worry, we don't, use location data or anything like that," and then, "Oh, gee, we just happen to know the location of everyone so we can tell them the exact rep to call." That's not creepy or anything. And then you've got TikTok now saying, "Hey, we're gonna get a bunch of TikTok influencers together." They're actually called TikTok creators, not influencers, I guess. And we're gonna send them to DC, and maybe we'll petition in person that, hey, this is gonna hurt us, and we need to keep TikTok there.
Seems like a pretty good summary
Great.
of the whole situation. That the vote goes to the Senate. When is that vote set to occur? Does it say here? I know it passed.
It hasn't been scheduled yet.
Okay,
hasn't been scheduled. It unclear if it's going to make it to the floor even, but we'll see.
I will say that from a business perspective, on the retail side of things, and there's another piece that touches on this, there are a lot of retailers who do heavily utilize TikTok in order to reach younger consumers, and there's a pretty heavy active monthly user base here in the United States, not really in our generation, but younger generation. I do know, cousins or nephews or whatever who are just super addicted to it, which is part of the problem with the service in some sense.
Yeah, but like, if someone's addicted to it, like that's not a reason to get rid of the service.
No, it's the national security
People have been addicted to social media for the last 20 years.
Yeah, and we're guilty of it with video games and instant messenger back in the day. There were other forms of it, so I'm not saying it's just this generation, to be fair.
No, I mean, look, like there were times in college where I played video games for probably like 24 hours straight.
Right.
Like, I'm not saying like to do that, but like I became a functioning member of society. So, like, okay, whatever. But
it just takes on different forms for different generations.
Well, the big thing. So you're sending these content creators there saying, "Hey, this is going to hurt our business," and I understand that because you pour all of your time into something and you don't want to see it destroyed. I get that, and there are people who have built really good livings through TikTok and other social media. It's not to disparage them. Like there's no right way or wrong way to earn a living. I'm not here to say that those people are inherently right or wrong. But what I am saying is that the purpose of government, when it's actually used successfully, is to solve the problems that individuals can't solve on their own because there's no mechanism for collective action. Different situation, but just the two of you are both familiar with the Triangle Shirtwaist Factory fire, right?
No.
Are you guys? Did you guys not like study
this
history?
No.
This feels like a Mark Vendetti appearance where he brings out some economic theory that we're supposed to be familiar with, and we just sit here sort of nodding.
Okay, the Triangle Shirtwaist Factory fire, it was in 1911. It was a factory in New York City.
That fire. My bad.
Guys, this is like one of the most famous fires in history.
Okay.
Like this and the Chicago fire are probably the two biggest fires in the United States in terms of notoriety for different reasons. But Triangle was a company that made shirts, as the name suggests. And they had this factory in New York City, and on March whatever, there was a fire, and you ended up with almost 150 people working in the factory who died. And they died because the doors to the stairwells and exits were locked in order to prevent people from taking breaks and to reduce theft. They said, no, we're going to lock all the workers in. Well, gee, if there's a fire in a garment factory, you end up with 150 people dying. So the legislation that came out of it and the consequences that came out of it were that you ended up with significant changes in labor laws as far as what companies were allowed to do, because it was a huge safety risk to lock all the doors to a factory where you're making flammable stuff. Where I'm going with this is no one looks back and says, hey, Triangle had a good business, but a bunch of, it's just a shame that happened. Like, I know this was hard for them. Like, no, it was, look, you endangered a bunch of people and you had to put the right legislation in place because otherwise businesses would just keep doing this because it was cheaper to hire new people than to take the precautions you needed to. This is why you now have like sprinkler systems and things like that in buildings and all that kind of stuff. So where I'm going with in terms of TikTok, no one on TikTok is engaging in any behavior like that. Like if you're a content creator on TikTok, you're not doing anything that's inherently dangerous, but the platform in and of itself is dangerous because of the national security risk presented by a Chinese company with direct links back to the Chinese army owning the platform. And absent any action from a government, content creators would just continue to do what they do because, look, they're making a good living and they're not inherently endangering anyone, but the platform creates danger just by virtue of being there. And that's why when I look at this, people are trying to make this into like a free speech thing or this and that. It's not. It's a national security issue. And ultimately, if you are a content creator on TikTok, and it gets, it ends up getting banned instead of sold. By the way, big news. I sent this over to Tucker when I saw it. Steve Manoosh and the Manoosh.
Manoosh.
The Manoosh is back. He says he's putting together an investor group to buy TikTok. which I think is just fantastic. Do you know that Mnuchin has had like one of the most fascinating lives that I've seen? Like, I'm kind of jealous of his life, quite honestly, aside from the fact that he spent like 20 years working at Goldman Sachs. But after that, like, he went and did some hedge fund stuff for a little bit, and then he decided he was going to be a film producer. And okay, like, you start, new film producer. What are you going to make? The Lego Movie, Edge of Tomorrow, American Sniper, Mad Max Fury Road, Entourage, Black Mass. Let's see, what else did he have? Sully, Suicide Squad, The Accountant, Lego Batman movie, Wonder Woman. I mean, to come out and, like, he had a 5-year film producing career, and that's the stuff that he did, it's pretty impressive. Am I wrong?
No. It's a good resume.
It's pretty cool, and now he's trying to buy a social media platform. I don't know. Spent 4 years as Secretary of the Treasury. Like, what a fascinating life.
I would agree. So,
I feel sympathy for TikTok creators who are going to get caught in the middle of this. It's not because they did anything wrong. I guess the best way I can phrase it in trying to say this as uncallously as possible, but I'm sure it'll come across that. It's a great lesson in you don't dig one well too deep for your business. You got to have multiple different revenue streams coming in from multiple different areas, and just because you're doing well in one area doesn't mean you shouldn't diversify out into others to try to find other forms of business. So I do feel for the people that might get caught up in this, but I think ultimately the national security concerns override it, in my opinion.
You better believe Meta is, or Facebook is sitting there smiling if this were to go through.
I think so, but, I mean, look, they already get so much activity on Instagram Reels that...
Well, that's what I'm saying. That's the pivot point.
I don't know how many people, move. I think a lot of the content might be double posted already, is kind of where I was going. Maybe not. I don't know. I'm not on either platform. Quick break here. Hour 2 of the Financial Exchange is next.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about the use of life estates and your primary residence. Todd, does the 5-year waiting period for Medicaid eligibility apply to the creation of a life estate?
Well, the short answer is yes, it does. But let me explain why it does. So, first of all, when you create a life estate, again, the general way people do it is they tend to put the remainder interest of the property in the hands of children. I don't like it that way, but that's how they do it, when you could have the remainder interest with a trust. But the moment you put the child's name on the deed and you reserve the right to live there is a completed gift for gift tax purposes. No one thinks of that, but now you technically need to file a gift tax return. And it's that creation of the gift, it's that transfer of that remainder interest in the property to the child for less than fair market value that triggers the disqualification period for Medicaid. So that's why you have to wait 5 years after you create this life estate arrangement in order for the house to be protected from the nursing home. It's very hard to avoid the 5-year waiting period, folks. There's really not too many ways around it.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. You can get it by calling 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi Code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
With the stock market remaining volatile, it couldn't be more important to have a sound financial plan. I'm Mike Armstrong from the Armstrong Advisory Group. There are risks with any investment strategy, and that's why we've written a brand new guide to help you understand those risks and how they can be associated with any financial decision. It's called Building a Financial Plan, and it may help you recognize the potential risks and rewards that are associated with your investment strategy, in addition to offering insight into how to research making the decisions that are best suited for you and your family. The guide also provides information on how to establish clear financial goals and what steps might be needed in order to achieve them. Call us today at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit DAVMA.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zada and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zada and Paul Lane.
Chuck, Paul, and Tucker with you here, and we got mixed markets at the moment. The Dow is off 44 points, so slightly negative. The S&P is down 7 points, slightly negative. NASDAQ up about 11 points right now. And really, all the heavy lifting right now is being done by a couple of the Magnificent Seven names. Microsoft, Apple, Google, and Amazon all up more than 1%. But the rest of this market looks kind of gross, quite honestly. And that's really the only thing that's holding this up from being, a day where maybe you see, a couple hundred points down on the Dow otherwise. We've got the 10-year U.S. Treasury up 9 basis points on the back of a hot producer price index reading coming in at 0.6% for the month, as opposed to 0.3% expected. We got oil up $1.57 a barrel on West Texas Intermediate to 81.29. AAA national average for gas prices also up 1.6 cents to 3.41 2/10 cents overnight. So gas prices resuming their rise as we head into the spring. And we've got gold down $15.40 an ounce to $21.65 currently. I got some news that I need to move to the top slot for the hour.
Oh?
The Pittsburgh Penguins.
Oh, I saw this.
Tonight, it's Jaromir Jagr bobblehead night at the Pittsburgh Penguins game.
Mm-hmm.
Someone stole the truck filled with Jaromir Jagr bobbleheads. And so the bobbleheads are missing, and they don't know where they are.
Like, if you're the person who stole these bobbleheads, like, what do you expect to do with these? Like, unload them at some sports memorabilia store where this is already headlines everywhere? They're going to know you did it.
It's true. You're going to just have to keep the 10,000 Jagr bobbleheads for yourself.
Rent a storage
unit now. And the problem is, right, you can't even show them to anyone.
Right.
Just
dumb.
Because the other thing that's going to end up happening when they end up making new ones, the new ones are going to be slightly different. And so as soon as 5 years from now you show up to a pawn shop being like, oh, I got this Jagr collectible, they'll take one look at it and be like, nope, that's the wrong one. You're going to jail. I don't know how.
I mean,
how dumb can you be?
That's probably like 10,000 bobbleheads. Like, I don't know. Like
it's probably 10,000.
It's usually like first come, first serve. They're not going to give you like 20,000, but an arena is 18,000 people. So anywhere between 5,000 and 10,000 bobbleheads just stolen.
The other possibility is that the person who stole them actually just really likes Jaromir Jagr.
Yeah, just as a shrine in their basement.
And wanted 10,000 bobbleheads. And the third possibility, and I'm not going to lie, the third possibility is that this is all a stunt, and Jaromir Jagr is going to show up on a Kawasaki motorcycle
throwing on
to the game, throwing out 10,000 bobbleheads.
Oh, man.
Wouldn't that be great?
That'd
Isn't
be
sports
phenomenal.
fantastic?
His arm would get quite tired, but maybe he could,
could
launch
shoot him.
slap shots.
Yeah, he could just launch him into the stands. This is a nice segue to our real top story for the hour, which is the new streaming service that ESPN, Warner Brothers, and Fox are trying to put together to have a bunch of sports on one streaming service. And I continue to look at this and wonder if it's going to have the effect that they think it will, because the premise of it is simple. They're going to bundle 14 different sports-heavy channels. So, think Fox Sports 1, ESPN, ESPN 2, whatever the heck Warner Brothers Discovery has under their umbrella. I don't know, quite honestly, what is there. I don't, but... Oh, I guess that's probably like TNT and TBS, right?
If it's, yeah.
Warner, yes.
Right.
Yeah, that's TNT and TBS. So you're going to get these stations on this streaming platform. And the early rumors are that this sports-only streaming bundle is going to be somewhere in the ballpark of $50 a month. So here's the question. For most households, they don't have the ability to just say, yeah, let's throw another $50 a month on the streaming tab. Like most households just can't do that. Things are pretty tight for a lot of people. So I guess my question is, who is the target for this, and does it end up just cannibalizing other streaming revenue that these guys get from, hey, you've got YouTube TV, or you've got this, or you've got that. Let's cancel that and just watch the sports, because that's what we watch most live anyways.
So a couple holes in this alleged, package that they're putting together here. Or I guess it's not alleged; it is going through. But with the final details of it, regional sports networks will not be part of this package. So to bring it to our New England audience, the Red Sox and NESN, that will not be part of that package. Similarly, on the NFL side of things, while ESPN and Fox will be covered, CBS, I believe, will not be part of this package. So meaning that your Sunday NFL games on CBS will not be covered there. So NFL, we know, runs the roost. They dominate the market in terms of viewership. So if you don't have the full access to all the, first of all, you're not going to get all the NFL games anyway, because that's with YouTube, that package, but not getting CBS, that's an issue. Not getting the regional sports networks, also an issue as well. So to me, to justify the $50 price when you're comparing yourself to YouTube TV, which is $73, as mentioned in this Wall Street Journal piece, that does offer all of those things that I'm mentioning, maybe missing a regional network here and there. To me, I just don't know what the hook is unless you're a big NBA and NHL fan, I guess. But I don't really see how this is better for the consumer, for the viewer, Chuck. Do you see that hole where I'm missing?
No, I mean, look, ultimately what this comes back to is what we've been talking about forever, is that it's getting too hard to watch these sports, and you lose viewership. I'll give you an example. Growing up, when I was a kid, I watched at least part of every single Red Sox game every year.
Me too.
Mm-hmm.
It wasn't the whole thing, because it was still like, a 3-hour game. And so most of them I might watch the first, 3 or 4 innings, or I might catch, the middle 3 innings or something like that.
Right.
Red Sox, Yankees, I'd watch, 9 innings of every game. Okay, great. I have not watched a Red Sox game in 2 years now. And it's not just because they're bad. Like, they were bad plenty of times when I was growing up.
Sure.
It's just, I have YouTube TV, and I'm not paying $30 a month for freaking NESN alone in the summer to watch the Red Sox. And so I just watch no games, and I don't care about the team anymore. The Red Sox have lost a fan, like one of the biggest fans in baseball. I watched every freaking game. I haven't seen a game in 2 years because it's just too hard and too expensive for me to watch.
And the team sucks.
And here's the thing. The worst thing that could happen to the Red Sox is I realize that my life is just fine without them. I don't even care.
I've reached that point too, Chuck. I almost have identical stats to you too, maybe even 3 years or so, where, I mean, certainly have caught some here and there during their playoff runs, but similar boat. But I don't know if that speaks to just the demographics of baseball in general. That's been talked about a lot, where they skew higher. They haven't really done a great job on the younger side of things to keep viewers on the platform, whether that be their highlights and how people can access them. MLB has had all sorts of missteps, but the regional sports network piece ties into it too.
Totally. And I think this gets at something that I say an awful lot, which is, look, ultimately, if you are a sports league, the best way to grow your possible revenue pie for the long term is to get as many people watching as possible.
Mm.
And maybe you don't get $8 a month from them. Maybe you don't get $20, $30 a month, like whatever it ends up being, depending on the platform. But man, just get as many eyeballs as possible watching your product. And that's how you actually build people that come back over and over. Because right now, okay, like I would love to be able to on a random Tuesday night pop on 2 innings of a Sox game, but I can't do it without paying $30, and it's not worth it to me to do that. And so those are eyeballs that you can't sell ads to because I'm just not watching. And look, they make hundreds of millions of dollars each of these teams and everything, so they don't care because they're fat and happy, and that's, look, I get it to a certain extent, but it's kind of short-sighted because you're killing your game for the long run.
And eventually the media rights, which have just been on a meteoric rise and don't seem to be stopping anytime soon, particularly on the NFL and NBA, but eventually when the viewership declines, maybe the MLB is a better one to scrutinize than the regional sport network. There will be a time where the bill comes due, where the amount that the regional sports networks are spending doesn't justify it and it doesn't work out for them.
And this is why I do like some of the stuff that some teams are doing. Part of this talks about, look, the Phoenix Suns, they announced last year that they are going to just be broadcasting their games over the air, free public broadcast TV, like it used to be, with your major stations. You can still get, like, right now, but do either of you have an HD antenna for your TV?
No. I don't, but I know what you're talking about.
So it's like a, rabbit ears, but it's not rabbit ears. They have different forms and, whatever that you can use. But ultimately, you get HD content what would you call that, Tucker? Not beamed, but
yeah, beamed. I think that's
beamed.
Fine.
They shoot it out, over the air, just like stations used to, and you get HD content that, by the way, is also higher quality HD signal because it's uncompressed, because it just travels over the air and doesn't have to go through a bunch of compression to get through cable. So that's also something that's nice, is that it's higher quality than what you get through cable. But the Sun said, 74 of our 82 games, they're available just over the air. You don't have to pay anything in order to watch them. That's freaking great.
Yeah.
Like, that's where you need to be going.
And you could have international people become fans of the Suns just because they can get to the product easily.
Totally.
Yeah.
Totally. So, in any case, that's what we got going on with sports and watching it on the tube, which you can't even call it the tube anymore because they're all flat screens now. It's kind of disappointing, too. Let's take a quick break. When we come back, we're going to be joined by Ted Rossman from Bankrate, talking about Americans chasing credit card rewards right after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Everyone has financial goals, and regardless of what yours are, the process of establishing a comprehensive financial plan is key to achieving them. This is Chuck Zada from the Armstrong Advisory Group, and our new guide called Building a Financial Plan may help. Some goals are bigger than others, like saving for retirement, but even smaller goals like paying off your credit card debt can be an important part of a well-rounded financial plan. As you build your plan, break your goals down into realistic tasks, establish a saving strategy, or determine an asset allocation that aligns with your risk tolerance. It's also important to create checkpoints to help you monitor your progress and make sure your plan remains on track. Call us today at 800-393-4001 and ask for our new guide called Building a Financial Plan. That's 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, You can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi folks, Susan Powers and Chuck Zotta here from the Armstrong Advisory Group, and we're talking today about our brand new guide for the month of March, Building a Financial Plan. Chuck, when it comes to building a comprehensive financial plan, what components should you include?
Well, I think you have to look at all of the big ticket items to make sure that you're accounting for them. So things like, do you want to retire, and what's the timeline on which you want to retire? What's your plan for housing? Are you planning on renting and just allocating a portion of your income on a monthly basis to rent, or do you want to be buying a place, and that needs to be one of the goals that you integrate into your plan? Other things might depend on whether or not you have children, like saving for educational expenses or things like that. And then obviously, you might have other things that pop up along the way as well. Smaller things. Hey, do you need to save for a vacation next year, or things along those lines?
So what's the best way, Chuck, to go about defining your goals?
Well, I think you really need to think about what's actually important to you in terms of how you want to live your life. It's not so much a financial discussion at first, but more thinking about what you actually want to do with your life. So if you say, look, I'd love to spend my time down in Florida more often, okay, that can get you thinking about whether you need to rent a place down there, buy a place, or some combination depending on what your life circumstances look like. So I think that's a great place to be starting.
Folks, learn how you can develop a comprehensive financial plan to help you pursue your goals, whether they are modest or substantial. Call right now to request your free copy of our brand new guide, Building a Financial Plan, at 800-393-4001. That's 800-393-4001, or request your free copy at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange, so go to visitusvi.com and book your trip today. That's visitusvi.com.
As promised, we're joined by Ted Rossman from Bankrate. Ted, thanks so much for joining us today.
Of course. Thanks for having me.
So, Ted, you guys did a survey regarding chasing credit card rewards, and some of the findings that came out of this survey to me blew me away and also put a fire in my belly just regarding some conversations I've had recently with clients. These people who have credit card balances not realizing that the rewards that they're getting are nowhere near as much money as the credit card company is making off their balance and the interest they're accruing on it. It's just crazy, Ted.
That's the key point. Yeah, we found that about 2/3 of people with credit card debt are making an effort to chase credit card rewards. And hey, I love credit card rewards, but not if you're paying 20% or more for the privilege. That's what's most important. The average credit card charges a record high 20.75%. If you have credit card debt, no shame, almost half of cardholders do, and it's often for very practical reasons. But if you have debt, you have to put your interest rate first, maybe seek a 0% balance transfer offer, or just stick to cash or debit for a while you pay off your debt.
Couldn't agree with you more. The reason I mentioned in the intro to the segment here is I had a client the other day with 20 grand in credit card debt, but over 150,000 in cash. And I didn't know about it until speaking with him. I said, "What are you doing?" He said, "Well, once I pay it off, that money from my bank account is gone." And, not understanding that you're borrowing at 20% and your bank account at most is making 3 or 4. I just don't think enough people realize how detrimental these interest rates can be, Ted, in this current environment. I just don't understand why people continue to carry those balances.
Yeah, I agree. That's a particularly crazy example. Now, fortunately, in that case, they have the cash to pay off the credit card debt. What I think is even more problematic are people living paycheck to paycheck. I do empathize with how many people are putting gas and groceries and other essentials on credit cards, or maybe it's a medical bill. And, it becomes a tough cycle to break, but don't trick yourself. Don't think, oh, I'm getting cash back or I'm getting airline miles. The typical rewards payout is often just 1 or 2% of the purchase amount. Maybe in certain categories, it's 3, 4, 5%. But it's nowhere near the 20 or 25 or even 30% you're paying in interest. So I would only focus on rewards when you're free from credit card debt. There are some good debt payoff strategies, like a 0% balance transfer card. They don't offer rewards typically, but some of these deals last as long as 21 months on cards like the Wells Fargo Reflect and the Citi Simplicity. Prioritize that interest rate if you have debt.
No question about it. Any other takeaways that you had from the survey was, how about in terms of the demographics and generations? Anyone have more debt or more chasing of rewards than another group?
We are increasingly worried about 20 and 30 somethings. Those are the groups that are adding to their credit card debt the most rapidly. They're also the most likely to be chasing rewards. And that's the catch-22. If you're debt free, then yeah, go for rewards. But if you have debt, you really need to prioritize that rate. I'm glad you brought up the debt versus savings piece as well, because we did another recent study. We actually found that over the decade or so that we've been doing this, right now there's a record number of people who have more credit card debt than emergency savings. And it's totally understandable how this happened with high inflation and high rates. But I think it just calls to mind whatever you can do to pay it off. I mean, also it's tax refund season. So, if you're getting that average refund is $3,200, a really good use of that money is to put it towards your credit card debt.
Couldn't agree more. Ted Rossman from Bankrate. Ted, thanks so much for the time.
No problem. Thank you.
All right, time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited, dine in only. Well, on this date in 1900, the U.S. officially adopted the gold standard after Congress passed the Currency Act. After decades on the gold standard, economic conditions in the country deteriorated to a point where the president abandoned the gold standard. Trivia question today: which president took the U.S. off the gold standard? Once again, which president took the U.S. off the gold standard? Be the fourth person today to text us at 617-362-1385 with the correct answer, and win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on tomorrow's show. 617-362-1385, and the fourth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Paul, you big McDonald's guy?
I am not, but respect the brand name.
I love McDonald's. It's in my top 3 for fast food. I put it up there with Taco Bell and Wendy's as kind of my mainstays. But piece in CNN today titled "McDonald's Prices Are Up, so lower income consumers are eating at home." And so what we are seeing is, again, kind of this story that's playing out in a number of areas where, hey, McDonald's is still having to raise its prices, and so as a result, you're seeing a little bit of challenge in terms of getting people who consistently visit their stores out to them. So McDonald's stock was down about 3% in trading yesterday as a result of some of the data that we saw on this side. And I guess it just means more McNuggets for me, which is fine. Let's take a quick break here. When we come back, we got the trivia answer after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Everyone has financial goals, and regardless of what yours are, the process of establishing a comprehensive financial plan is key to achieving them. This is Chuck Zada from the Armstrong Advisory Group, and our new guide called Building a Financial Plan may help. Some goals are bigger than others, like saving for retirement, but even smaller goals like paying off your credit card debt can be an important part of a well-rounded financial plan. As you build your plan, break your goals down into realistic tasks, establish a savings strategy, or determine an asset allocation that aligns with your risk tolerance. It's also important to create checkpoints to help you monitor your progress and make sure your plan remains on track. Call us today at 800-393-4001 and ask for our new guide called Building a Financial Plan. That's 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, trivia question today was, which president took the U.S. off the gold standard? That would be FDR. On June 5th, 1933, the U.S. went off the gold standard, a monetary system in which the currency was backed by gold, when Congress enacted a joint resolution nullifying the right of creditors to demand payment in gold. Winner today of the Financial Exchange Show t-shirt was Tom from Spencer, Mass. And Tom's also registered to win a $100 gift card to Applebee's, which we'll give away tomorrow. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
Well, there's a piece in the Wall Street Journal talking about the announcement back in December that Nippon Steel from Japan was agreeing to buy United States Steel, U.S. Steel, and it's a $14 billion deal, and questions now around whether or not this is something that is going to end up making it through the regulatory process because of concerns about foreign ownership.
Yeah, Nippon Steel is the world's fourth largest steel maker. Previously, ahead of their bid, Cleveland Cliffs and U.S. Steel had been trying to get into merger talks for many months. However, the concern was the merged company would control the country's entire iron ore market and about 80% of the automotive steel market. So they knew antitrust regulators were probably going to shut down the merger. Now you have Nippon Steel stepping in, but there's concern over many of the legacy union members and just the role that the steelworkers present in this country, that having outside influence from Japan would potentially, kind of conclude that sort of U.S.-centric workforce.
Yeah, this is an area that, again, I think that ultimately when trying to view what this industry needs to look like in the U.S., there are a couple different considerations. The first, the pure economic one, is, look, if it's cheaper to make something somewhere else, of course you'd want it. Like, of course you'd say, yeah, let's make it more cheaply. But in the case of something like steel, there are also concerns about, okay, where is that production going to come from? Is it going to come from, countries that are inherently friendly to you, that you have good relations with? Or is it going to come from countries where those relations are a little bit rockier and you're not sure if you'll be able to get the same product in the event that geopolitics become a larger issue? So this is one of those industries that I look at and say, hey, the economic concerns are one thing, but the national security concerns for things like steel, especially, the high-grade stuff that's used in military and defense specialties, those are things where, even if it doesn't necessarily make the most economic sense, you still want, domestic industry and domestic control. And when we talk about, this kind of purchase, I'm not inherently against it, provided that you build in certain protections for the things that are really important for national security in there, in my opinion.
Is there anything better than sitting on a beautiful beach watching the sunset with an ice-cold drink? Well, you can experience that right now by booking your next vacation in the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to visitusvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, The USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Electric vehicle startup Fisker, who went public, I believe, back in 2020 through a SPAC. Tell me if you've heard this story before. They are now on the verge of filing for bankruptcy as they have hired restructuring advisors to assist them in that process. Fisker, the interesting thing about them, they've actually been around for like 15 years. They got their start back before the housing bubble burst, believe it or not. And it just took them a long time to kind of get up to the point where they were starting to, think seriously about making real product. But ultimately, this is another company that, rode an awful lot of hype to, some fairly significant valuations. And ultimately, as we see in the automotive space more often than not, you're generally pretty unsuccessful. I mean, this was a company that back in early 2021 was valued at $8 billion and has not produced a single car. So there's that.
They won't be the first. They are not the first electric vehicle company that has had a lot of trouble since the 2020 sort of speculative boom with SPACs and IPOs, and they will not be the last. It's a really cost-intensive business to be a car manufacturer. They tried to go a little differently at it by not doing a factory and having workers. They outsourced the production to a facility, a manufacturing facility in Austria, and there was all sorts of logistical challenges getting their cars from Austria to the U.S., and there were also some safety issues with those vehicles as well that they had to combat with the transportation department. So certainly going to be more of these, Chuck, that fall by the wayside for every Tesla. There's going to be a lot of graves out there for companies that aren't able to make significant inroads in the electric vehicle market.
Yeah, it's just a brutal space, and this is something that you have to really think about. I know that everyone gets so hyped up for, this company's like, they're going to change the world. Most companies don't change the world. Most of them don't. And especially like what we're seeing is in certain industries, most of the companies that, try to get started don't even survive.
It's hard business, really difficult business.
And the auto business is one of them. You look at the auto business, the airline business, and fashion, and I continue to say those are the three toughest businesses to try to operate in because there is just no brand loyalty. It is all dollars, and they're highly capital-intensive businesses, and you basically have to spend billions of dollars today to hope that you eke out, some very slim profit margins down the road, and oftentimes you can't. So it's they're just brutal businesses. Let's see. I want to talk a little bit. We haven't talked about this in a while. I want to jump ahead and talk about pickleball, if that's cool with you, Paul.
Sounds good.
Why are people so angry about pickleball courts?
Is this about the noise again?
Yeah, it is. People are like, oh, like it's this noise that just is, it goes into my soul and just it's I can't deal with it. And I'm like, if our grandparents could hear us now, my goodness. They had to deal with freaking polio, and we're worried about a pickleball court being too loud.
The decibels, Chuck, they're just people can't handle them. It's a very
what's
very
the deal?
loud sound.
I've spent a lot of time. We have a pickleball court right next to our office, and I've spent a lot of time like out there, pretty close to it, just because especially in the summer when it's nice, it's like I'll move my take my computer outside and hang out by the pickleball court. It doesn't stop me from like working or I don't understand. What's the deal with? Is it that annoying?
Is that tennis or pickleball?
Pickleball.
Wait, can you hear me?
What? Chuck, come back.
I just don't get how this is the thing that's causing the problem. So the story here is that Braintree spent about $500,000 building pickleball courts, and sounds like great. Like, I don't play pickleball myself, but I don't know, like it's great. Like, it's a cool little sport. And apparently you've got people complaining that it's just, too noisy, and I just don't get it. Like, it's a pickleball court, and furthermore, it's something that, like, I don't know, there's one complaint here that is, hey, we're trying to, balance this with the idea that we want to, keep open spaces accessible, and, we want people to be able to use them, but we have to figure out how to deal with, the noise of it. I don't know, like, these were parks to begin with. Like, most of them had tennis courts. Like, what do you think you're going to have if you live next to a park? Like, complete quiet?
Tennis isn't as loud, though, Chuck. It's a softer bounce, if you will.
It's a softer bounce. Oh, okay. I just don't know. Like, this is not a real problem. It would look, if this is, hey, the courts are operating at night and I'm trying to sleep. Okay, fine. Like, yeah, don't put lights on them and have them shut down at 8. But it's during the day. You're at home.
Yeah, this guy's saying 13 hours a day, every day of the week. That's what he's claiming. Even with the windows closed.
So that would be a 7 a.m. to 7. Well, it's probably getting
it's like 7 a.m. to 8 p.m.
Yep.
Okay. I don't understand the problem.
On the weekends, though I'm up this early, I could understand not wanting it to be a 7 a.m. start on weekends. That should probably be 9 a.m. But other than that, I don't have any beef.
Here's the thing. It's in New England. It's half the year. It's not even happening.
Right.
True. Very true.
These aren't covered courts.
Not to mention the winter, unless it's a night.
That's the half of the year it's not happening.
I will say, some of these pickleballers in the New England area, they're still out there playing if there's no snow on the courts and they're dry in January, February.
Well, I was just talking about the lighting. But
sure.
But if it's a night court, then yeah, okay,
right,
fine.
Right.
But nobody's going out when it's like 30 degrees outside for pickleball.
According to tests undertaken by a company by the name of Vibra Sciences, a Connecticut-based company, to test how loud this was, the peak reading on the road where these were was 62 decibels, and in the middle of the court it was 85 decibels. So to put this in perspective, 60 decibels is equivalent to dishwashers. 85 decibels, which again, it's like, that's if like you're like, actually hearing it, loudly forever. That's equivalent to somewhere between an alarm clock and a blender. But it's on and off. It's not, like, brrr, and again, you're also not standing in the middle of the court when you're listening to it. You're in your house. Other annoyance is the high pitch and high frequency of rapid-fire paddle shots, which some have compared to popcorn cooking in a microwave.
I like that sound.
Can be unpleasant to nearby neighbors. Let's see. They are also, USA Pickleball is trying to develop quiet pickleball rackets that
you gotta innovate, Chuck. You gotta
have
innovate.
a quieter decibel level.
Put silencers on them. Yeah.
I mean,
like a sniper rifle. You put a silencer on it.
I don't know. I mean, all the problems that we have in the world, and we're concerned about people trying to get a little bit of physical activity, and it's too loud next to a house.
See, the sneaker sound would drive me insane. That's just me.
There's not much of that in pickleball. It's a slower game.
Yeah, true, but still, it's there.
But yeah, I can't get all excited about how noisy pickleball is. It's fine. What's the decibel reading on a tennis ball? They don't specify that anywhere.
I don't think they specify that anywhere.
No, I mean, I don't know. It's pickleball. This should not be something that is cause for concern.
60 decibels. Quick Google search. Tennis ball.
Okay. So
let's see. 55. I'm seeing 45 somewhere. So lesser, but not by a significant amount.
Yeah, it's just, if you don't want to live next to, like, because most of these, by the way, are just repurposed tennis courts or parks.
Oh, sure.
no one knocks down a house to put up pickleball courts. So you were living next to a park anyways. It's not just going to be quiet. Like, you're going to have kids running, and you get the noise complaints about, oh, kids are running through the park. Like,
Kids
you
are
live
having
next
fun.
to a park. The kids are having fun. I can't make this a real problem. I'm sorry. Let's take a quick break. Stack Roulette is next.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues, and while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
The stock market recently reached all-time highs, but with the volatility we've seen over the last several years, there are no guarantees it'll stay there. This is Susan Powers from the Armstrong Advisory Group. While job growth is strong and inflation has declined, the past few years have shown us how rapidly conditions can change, which is all the more reason for you to have a financial plan in place that is built to withstand the ebbs and flows of the stock market. Our new monthly guide is called Building a Financial Plan, and in it we discuss the process of putting that plan together, including the importance of setting goals from paying off debt to saving for retirement, as well as a variety of additional planning strategies. Call our office at 800-393-4001 to get your new guide today, or you can request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Paul, what do you have for Stack Roulette?
One big reason Gen Z is still on Facebook: saving money. This is in reference to Facebook Marketplace, which is still very popular with younger users as a place to exchange goods. For example, we had a glass coffee table that we got rid of when the kids came along because it was just a obstruction nightmare for them to bump their head on. My brother-in-law took it on and then recently sold it on Facebook Marketplace and split some of the money with us. This similarly happens all the time. I see car seats and all sorts of other stuff posted on there. That has been the one lasting impact of Facebook. I know for older users, they still use it to communicate with people. Younger generation, it seems like, skew a little heavier towards Instagram and Snapchat and TikTok to communicate with people rather than Facebook.
Yeah, I've heard some interesting success stories about people using Facebook Marketplace to either buy or sell things. I've never used it myself just because I haven't been on Facebook in, I believe, 2 years now. Maybe 3. It might be 3 years, actually. I still have an account. I just forgot how to log in, and so I haven't, and my life's been fine. But I've heard some interesting success stories, especially on kind of weird items that are, not normal and that might not have like a ton of value to sell, but people are like, hey, if I can get $10 for this, great. And someone, with the same niche hobby likes it, and okay, great. It matched up.
Yeah, I had a situation where I talked about the coffee table, but another one was a guy I played soccer with that, I don't see that often, but posted a car seat base. I knew we were having a second kid. It was, 50% of what I would just buy for regularly. It's a car seat base. It's, pretty simple plastic material. It's not something that you need to wash extensively. So I just reached out to him through text. Hey, I saw you posted here. I'll buy it from you. Met up with him and got it. So there are instances where it can be useful, and there is some trust built in with the network effect to have that system on there. But otherwise, it seems like Facebook for the younger generation, less use. You see, to your point on not logging on for quite a while.
Yeah, there is this piece in the New York Times interviews a couple people who they've bought 30 different items off of Facebook Marketplace that have a retail value of around $4,700, and they've ended up paying about $1,400 for them, saving over $3,000 in doing so. And these can be anything from office chairs and desks to bookshelves, air fryers, plants. I can't imagine buying a plant on Facebook Market. Like, how do you...
I paused when you said that one too. Really?
I don't know that I would buy a plant.
It's got to be a fake plant. It has to be fake.
I guess. Yeah. Well, no. If it's fake, you're not gonna you don't give them the money before you take delivery, right?
No, I wouldn't do that with anything.
But first, who's selling plants on Facebook Marketplace? These are like indoor plants. You couldn't find someone to just you needed to get the money from the indoor plant that you already bought? I don't know.
Making a buck.
Yeah, it's it doesn't feel right, but I get very attached to my indoor plants, so that could be a me problem. Let's take a quick break for the rest of the day. We're back tomorrow to finish up the week on the Financial Exchange.